my computer. Okay, there we go. All right. Well, hi everyone.
Oh,
Welcome
sorry.
to. No, you're fine. You are welcome to
Okay,
share that. I'm just going to talk anyway, um,
great.
which is fine. I do not need to be on camera. Whenever I can not be on camera, I prefer that. Yeah. So welcome to Taxes for Indie Game Designers. We're so glad to have you with us today. What an awesome resource! I can't wait to get into this information. I'm Ashley Warren. I'm the director of the Storytelling Collective. Our goal at the Storytelling Collective is always to help you find creative success, whatever that means to you. And part of that is understanding the business side of things. So that's why we're delighted to host this talk for you today with Ben Green from Brass Taxes, who I think will just be a wealth of information. I have a couple housekeeping things to address real quick. One is just a disclaimer. The Storytelling Collective does not provide official legal or financial advice, so please always consult with a tax professional before making any financial decisions. This is simply a courtesy resource to help demystify the complicated world of tax law for independent creators. So we hope that it'll set you on the right path, but be sure to always consult with professionals, including folks like Ben, when you're actually doing your taxes and making business decisions. As you know, we're recording this to put on our social media channels after the talk, just to make sure that it's a resource that everyone can access. So if you, I think as attendees, your cameras won't be on screen anyway, but just letting you know that it is being recorded. So any questions that you ask, we will be sharing publicly. And you're welcome to use chat as well. You should have access to that. At the bottom of your screen, you should see a Q&A box. That's the best way to submit questions. You'll also see a raise hand feature, which we'll use a little bit more after Ben gives his initial talk. And that'll just kind of let me know that, oh, hey, you have a question that you want us to address. And I think that that is about it. So let's get started. Welcome, Ben. Thank you so much for doing this for us. What an awesome resource.
Thank you so much, Ashley. Yeah, so my name is Ben Green. I'm a tax advisor at Brass Taxes, and also a tabletop game designer and role-playing game writer, and and just game enthusiast. Uh, so yeah, I'm super excited to be doing this. And Brass Taxes in particular, that this this is a company that our specialty is helping freelancers and creatives of all kinds with taxes, because a lot of times we fall into uh, this weird sort of bubble that a lot of accountants are unfamiliar with, and um, everyone that works at Brass Taxes, including the founder of the company, Russ. Um, I'm all of us have at one point or another been a freelance creative type person ourselves. I do my game stuff, but then there's also musicians and writers and visual artists. It's a cool, anyway. So anyway, that's who I am, and sort of a little bit about where I'm coming from. Um, and yeah, so taxes for indie game designers. I guess the first thing is, and let me just say, some of the two of the questions that are up in the Q&A right now, I think that we'll get to that. So jump in and let me know, folks, if you still have unanswered pieces of that by the end of it. But really, I wanted to give this talk because I felt like this is a part of the business that, or I guess a part of the activity. Like, a lot of people write stuff for role-playing games, and thinking about yourself as a business in addition to just someone who loves what they're doing is this weird dichotomy. And I feel like a lot of times people, like, I feel there's like a lot of feelings that come up about it, like sort of discomfort and you know and uncertainty, and people get really stressed out about their taxes and like, what do you do with this stuff? And um actually, I'm going to back up this slide for just a second, because this was something Ashley brought up before we started recording, that I wanted to hold on to this piece. one of the most helpful ways I've found to think about taxes is that really what you're doing is you're constructing a narrative about your life in this very sort of stylized format. So tax forms are are sort of, honestly, they're sort of like stat blocks. They're like, it's you're there's this very like mechanical uh, format, but you're using it to tell a story about you. And within that context, a lot of what your taxes end up looking like has to do with the story that you want to tell about your life. And so in that sense, I feel like taxes can be a very empowering thing for indie game designers, because we can then kind of tell we can tell the story about ourselves that we want to tell, and frame what we're doing in a way that sort of we can have that I've found for a lot of folks can be really uh, empowering in this way, because it's like, no, I am a business. I am doing something that has value. And there's a lot of conversations about like uh fair compensation for writers and artists, and those conversations really sort of center around how as a society we value the work that we do. And I think that being able to claim that what we're doing is a business, and claim the expenses associated with that business, and take tax positions that benefit us financially, is also a benefit to us sort of socially. So I feel like this is important work on a variety of levels. So when do you need to start thinking about this? Uh, Now it says when you start. Now an important word here is when you start trying to make money making games. It doesn't actually matter if you are making money making games. You can make nothing and still claim to be pursuing this as a business. Many businesses uh, make less money than they spend. Um, and this is, that's just a part of being a business. Before, there's times where you're not profitable. So even if you haven't made any money yet, it's okay. You can start thinking about this even then. Yeah. So it's been like a week or so since I made this slideshow for you guys. So I'm I'm remembering now that was my next text. But yeah, so even if you're basically if you're trying to make money outside of what your regular W-2 job is, you should be thinking about this. For tax purposes, it gets a little confusing because there are a lot of gig workers that are still paid on W-2s. Tax agencies don't consider you freelancers. Also, I should add, because I know that we have folks outside the United States, my specialty is US taxes. Other countries' taxes, I don't know as much about. I've worked with some foreign taxes a bit, but you should definitely consult a tax professional in those other countries. So yeah, even if you didn't publish anything. So you're trying to like, what if all you did was you're thinking about it, you're buying role-playing games and, signing up for workshops. Cool, you're in business. You're thinking about doing things that might generate income, you're in business. And from a tax perspective, you kind of have these multiple identities, right? Because when you start doing this, you're kind of going to have to, there's like this dichotomy where you're a human, right, with all of the amazing complicated social and emotional and biological and economic sort of uh, uh, functions of being a human, uh, and then you're also a business entity. And tax agencies sort of look at both of those sides of you at the same time. And so like there's going to be and I'll get into this a little bit later, but that that I just got distracted by my user interface. So yeah, so essentially, when you're doing this, there's gonna, in your own head, you can have these things, these identities be separate. But then when it comes time to file taxes, they're sort of merging into this one thing. And so they're tax forms for you as a human, and there are tax forms for you as a business. And an important point that's coming up here is that as a business, you don't pay taxes on your income. You pay taxes on your profit. When you make money, and then when you lose money over the course of the year, when you have more expenses than income, like, so for example, you haven't even published anything yet, but you've started moving in that direction. So you have zero income, but you have some expenses. Those losses get subtracted from your overall taxable income. So that you can there's even a tax benefit for you for claiming these expenses, even when you're not, deeply, when you're not generating income. There we go. Cool. An important distinction that I want to make, because this is a very common misconception, is there are your business expenses, which are also sometimes called business deductions, and then there's this thing called the standard deduction. And so a lot of people who I work with, they say, oh, I haven't been claiming these expenses because they're not bigger than the standard deduction. And the standard deduction is basically, the idea is the government recognizes that there is a cost to just being alive in the world. And so instead of taxing you on all of your income, there is this amount that gets subtracted from your income before calculating your taxes. One moment, my children are yelling at each other for some reason.
That is totally okay. This is, I think, pets, children, other visitors during a webinar are fair game in 2021. So I think Ben will return in just a moment. I feel like I'm already taking so many notes. So I'm very excited to learn so much already. Let's see. I'm going to unmute Ben. I think you're ready to good. Okay. Let's see. I'm going to mute myself. And
great. Cool. Thank you. So yeah. So the thing about that is, so the standard deduction is just an amount that you can subtract from your income. And then there are like other things that people talk about when they talk about itemizing deductions. That is a separate thing from your business expenses. You can always claim your business expenses. If they're $1 or if they're $1,000, you can claim your business expenses. And so tracking your expenses in some way is almost always going to be beneficial to you. And there are a lot of ways to do it. People use, spreadsheets. People use like QuickBooks and stuff. There are apps now that you can link to your bank accounts that can pull that information, and sort of a lot of times they file things, they sort of auto categorize things in a little bit weird ways. An easy method that we use, that we recommend to clients a lot, is we basically recommend just labeled envelopes, like things like advertising, shipping costs, research, which can include like buying role-playing game books and buying games and whatever, or equipment, right? I don't know if you, well, I'm sharing my screen, but in the background, I have a 3D printer that I use to prototype game components. And so that was a business expense, and filament that I buy is a business expense. And so basically, I've got these envelopes, and when I buy stuff, I just jot down what it is, what I bought it, and how much it was, and I stick it in the envelope. And then when I'm doing my taxes, I can take these envelopes out, I can shuffle through them, and I have all of them organized. Now, all of these different options are good for different people, right? Like the apps that sort of automatically pull stuff from bank accounts and stuff, those have not worked for me. Other people love them. I don't love them, whatever. What matters is any method that you can be consistent about is the right one. And so yes, and I think that Ashley shared, there was some resources that from Brass Taxes that we shared that we provide to free to folks, that are it's a good starting point for recording your expenses. Yeah, so, and we can get into that more in a little bit. So what kinds of things can be expenses? Anything you spend money on that anything you spend money on that plausibly improves your ability to make money can it be at least partly a business expense. You know, the language that is used in by tax agencies is ordinary and necessary. So if you were talking to another person in your industry, would they agree that what you're spending money on is a normal thing that improves your work? And if the answer to that is yes, then that can be a business expense. And so I have this list here of possible things that you could include, right? And in particular, you know, if you have space in your house that, you know, something that's not on this is, you know, oh, actually, no, it is my last one. Cool. So, you know, the stuff in your house, like your house is being taken up partly by work-related things, and therefore a fraction of your house expenses, whether it's rent or mortgage interest or real estate taxes or renters insurance or utilities, those expenses, a fraction of those then become business expenses because a fraction of your house is a business activity. And so these sorts of things are all examples, but I think a good way to sort of blow up your concept of this is to go back to that concept about how you're constructing a narrative about what you're doing. And so really, as you think about like, what am I drawing on as a creative person? You know, like if going to museums, right? Like, I mean, I've definitely had campaign and adventure ideas at museums before, like going to an art museum and staring at paintings and being like, this is such an awesome set piece, you know, and so by thinking about those things and then finding ways to sort of, and this actually gets at, there's a question about the right documentation. So a lot of times, freelancers get told you've got to have receipts. And I think this actually might be my next slide. No, it's not my next slide. It's in here somewhere, so I'll come back to that. Whatever. I'm doing it live. We're going here now. So I don't know where it is in the slideshow. We'll find it. But essentially, a lot of times people get told you've got to have receipts. And receipts are great, but you can also have other sort of third-party verified things like, you know, people have used credit card transaction logs and bank transaction statements and, you know, Venmo history, PayPal history. Even I've seen clients use text message history. for cash transactions. Someone wanted to rent a PA system from a friend for a concert and basically just texted, hey, is 250 okay? And the person said, yeah. Said, cool, I'm bringing it over now. Thanks. That text message exchange was actually accepted as evidence that the expense happened. And with something like a museum, your ability to claim that as a business expense is linked to what extent did you externalize the connection that exists in your mind, right? So if you go to an art museum and you are inspired by some piece of work, and then you leave that connection in your head, well, there's no documentation. But even like if you tweet about it and you just say like, hey, I was at the museum today, I saw this painting, this is the name of the painting or the name of the artist, like it was amazing and I want to make an adventure out of this. You have just created the documentation that links that experience to your work. And that then becomes evidence that justifies claiming your museum membership as a business expense, or at least partly as a business expense. And so as you start to think about that and think about the ways that you basically talk about and express the stuff that you do, you're able to kind of expand the sort of net of things that you can claim as expenses. Now, I mentioned earlier that you're taxed on your profit, not your income. Profit is your income minus your expenses. This is important because your expenses get taken out before any taxes are calculated. So better records lead to you being able to claim more expenses, lead to less taxes. Even if your expenses are bigger than your income, so you end up with negative profit, right? That's called a loss. And if you have a loss, that can still actually be beneficial from a tax perspective. Ideally, we would hope that we're not having a loss because the goal is to make money. But, living the dream. So that's the goal. But if you do have a loss, you can then basically that loss gets subtracted from the rest of your income before calculating your income taxes. So it can even be beneficial from a tax perspective to have a loss. And so it's worth tracking expenses even if you don't have much or any income. As long as the goal is moving towards more income. Yeah. So another reason this is important is because in addition to paying income tax on your self-employed income, on this freelance creative income that you generate, or on the freelance profit that you generate, you're also paying self-employment taxes, which is essentially, comes out to about 15% of your profit. And it's Social Security, Medicare. You also pay these taxes when you have a W-2 job, but your employer pays half and you pay half. Since when you're a creative freelance person, you are your own employer, you're paying both halves. Okay, so there are these extra taxes. What it works out to is you can expect to owe about a quarter of your profit in taxes, roughly. And so when I make money, I just know I'm going to set aside a quarter of that. Like I'm just throwing that in the bank account and forgetting about it and settling up when I file my taxes. So is profit bad? Essentially, there's a balance between you now and you in the future, right? You now wants to pay less taxes. So profit is bad because you now don't want to pay taxes. You in the future want to be profiting from your work. So profit is good. And not only that, but being able to show that you're profiting can be good, because that enables you to get business loans, or if you want to take out a mortgage, being able to show that you're engaged in a profitable business helps you helps you get that. And because self-employment taxes are paying into Social Security, it's if you plan on collecting Social Security someday, that can be a good thing. So like, there's a temptation, I think, when people get into sort of the weeds thinking about this, of being like, minimize profit, minimize profit, minimize profit. And yes, there are benefits to that, but there are also sort of long-term benefits to being able to show profit, and being able to, even though you're paying taxes. I mean, something that a conversation that I have a lot with clients who are being successful is, they're like, oh my gosh, I just made a lot more money this year, and so I owe way more taxes than I'm used to, and I'm kind of freaking out right now. And it's like, I hear that. That is important to like this is a scary moment, but let's also remember the reason you're in this scary moment where you're owing a bunch of money, this big number that's freaking you out, is because you are kicking ass. And that's amazing. Like, you just made a lot of money this year doing something you love, and that's incredible. And you should, like, this is a celebration. And there happens to be this other side of this. So there is also this kind of dichotomy there. And it's okay to have mixed feelings about it. If you remember two things from this: track your income and expenses, because income minus expenses equals profit, and you'll owe about 25% of your profit in taxes. So save that money. Oh yeah, get paid a fair wage for your work. The reason that I'm doing this, I kind of mentioned this before, all of us at Brass Taxes have been freelance creatives in the past. We strongly believe that creative work should be fairly compensated. I made this because I love games and the tabletop game community. And I just wanted to give a shout out to Covray Studios, which we licensed the photographs for this presentation. We licensed from them. And part of fairly compensating creative folks and part of valuing our work is giving ourselves the permission to derive the tax benefits that we're entitled to by doing it. There's like, when you first start doing this kind of thing, there are all kinds of like feelings of weirdness that come up about like this. There's this kind of like, I don't know, a lot of folks have, I don't know, I get, there's a lot of feelings that come up basically. And it's okay to have those feelings. And it's also okay to have those feelings and take those tax benefits anyway. And I think, yeah, that's the end of my presentation. And I see there is a question here that I haven't answered yet. So can you, the question is, can you avoid self-employment taxes by starting a company? It's sort of, I will, instead of saying you can avoid them, I will say it sort of shifts what they're called and how you're paying them. You're still paying Social Security and Medicare taxes. They're no longer called self-employment taxes. I generally, well, actually, how about this? A DBA or an LLC Those sorts of things from a tax perspective make no difference at all. For the most part, they're like, some local taxes, like New York charges like $25 a year for if you have an LLC. There's that kind of thing, but the IRS does not care if you have an LLC or not. If you have an S corp, they care, or a partnership, they care. Generally, we don't recommend people start thinking about incorporating until they're showing, like, let's say your income is from the activity is like $120,000 a year. That's when you start thinking about, that's when the sort of benefits of incorporating start outweighing the costs of incorporating. Excuse me. Cool. So yeah, let me go back to the beginning. There we go.
Yeah.
What are some so yeah, questions?
Sure. So yeah, why don't we open it up to questions? Do you want to continue sharing your screen, or is it cool if I
Oh yeah,
turn that
yeah.
off?
Yeah, totally. Turn it off.
All right. Yeah, well, that was awesome. Thank you, Ben. I took so many notes. So we have a few questions here, a few that were emailed to me ahead of time. So why don't we delve into those first? And I encourage everyone who's listening to continue to submit questions. And it looks like, we have a couple there. All right. So someone asked, I ran a moderately successful Kickstarter last year for a new venture that I'm not producing a product for until later this year. I keep reading about using the accrual method and counting the income in the year you earn it rather than when you got it, but I haven't found anything yet that tells me exactly how to do that. Can you offer any insight?
Okay, so just for some context, there are different ways of accounting for your expenses and income when you're self-employed. There's the cash method and the accrual method. It's tricky to switch between them, and there's a lot of forms and kind of rules about how you can do that. So generally, you want to sort of pick one and stick with it. For accounting purposes, the overhead involved in the cash method is far simpler. And so one of the main benefits is it's just way easier and more intuitive, right? Money comes into you get money, you claim it as income. You spend money, you claim it as an expense. The reason that folks use the accrual method is because in situations like this, where it's common to be where there's sort of swings where income is coming in 1 year, but then the expenses associated with that income are going to be happening on a different year, then using the accrual method can kind of smooth out your income. Generally, I have found that the hassle, the accrual method is far easier to mess up. And the hassle associated with doing the bookkeeping for it is, I've found, rarely worth it. So I guess what I would say about that is, if this is going to be a typical thing for you, then where you're planning on running a lot of these Kickstarters, where you're getting the income in 1 year and then you're actually paying to produce the stuff in a following year. If that's going to be a typical thing for you, then maybe consider using the accrual method. But another thing that you could do, and I know this seems silly, is like, if you're using the cash method, that might be one reason why you don't run Kickstarters that end at the end of the year. Because like running a Kickstarter that ends in January, it gives you the most time possible to spend that money before the end of the tax year, so that you can pay less taxes on it. But even if that does happen, right? Even if you do have a Kickstarter, it ends in December, so you just get this sudden influx of cash and you don't have time to spend it. You know, and so you end up sort of being stuck with a tax bill. If you know that's going to happen, it's something that you can kind of account for in your financial plan for your Kickstarter. And also you can know that the following year you're going to have all of these expenses that are going to be subtracting from your overall income and saving you taxes. So I wouldn't necessarily, like, it's not ideal, but it's also not catastrophic. It's just sort of like shifting when you're paying taxes on stuff from one place to another place. And yeah, so that's that.
Sure. Yeah. So, gosh, I feel like taxes pertaining to Kickstarter could be its own topic, but I would say that in general, if someone's planning a Kickstarter that has collaborators, what are some steps that they should take as they're planning out their Kickstarter to better prepare for taxes later?
Yeah, so if you have collaborators on a Kickstarter, one thing that's important to think about is, like, if the money is going into a bank account attached to your name, it is your income. And then paying the collaborator their cut of it, because they're not, like, for tax purposes, you're paying them for a service, even though you're collaborators and there's not any sort of hierarchy or anything. For tax purposes, what's happening is you're getting the income and then you're paying them, and then on their taxes they're going to claim that as income. It's, something that you might consider doing, and this would be a reason to set up like you could set up a joint checking account that has both of your names on it. And you don't need a DBA, you don't need an LLC to do that. Like, people can just set up, I mean, if we felt like it, I guess me and Ashley could create a joint checking account. And so you can do that with your business partner so that the money is going in there to make it clear that it's split income. And in general, having separate credit cards, having a separate account, if there's a significant amount of money moving in and out relating to your game design work, it's definitely useful to have that separation. If for no other reason, it makes your own bookkeeping easier.
Yeah, that makes sense. So let's see. We have another question. Oh, from Jazz, who actually also emailed me a question. So let me actually answer or ask their first question that they emailed, and then we'll get into your other question, Jazz. So their question is there a checklist for receipts I should gather for expensing against a 1099 and or a Schedule C? And they gave a little bit more information. In previous years, our accountant has gone through a list that's on tax forms, but I always need to have the information on hand. And I get stressed when she asks for things like the phone bill that I don't have prepared. And then our accountant uses her know-how to estimate how much we should expense for each business, since we use our phones for our freelance work, same with internet price, etc. So what are good rules of thumb, and like what should Jazz have prepared when filing for those kinds of things?
Yeah, that's a really good question. Something, and I believe this is actually the materials that we provided to Ashley. Something that it is basically, how is this? There's basically on the Schedule C, which is the tax form that you use for declaring the income and expenses associated with this freelance work. The Schedule C has on it this list of different categories of expenses, and then the IRS has all these explanations of what they mean by these things. But so I mean, one thing you could do is you could just look at the Schedule C and sort of try and organize it that way. There's advertising and, paying people and office supplies, and then, like utilities. As far as how to split these things up and how to categorize them, there are certain categories that the IRS has very particular rules about because they're very prone to abuse. Things like home offices, the IRS has very special rules about, or meals expenses, the IRS has very special rules about, because they don't want people just being like, well, I was at work and I had lunch, so it's a meal expense. They don't want literally everything you eat to be a meals expense. So they've set up special rules because that's exactly what people did. But outside of those particular categories where they have these special rules, like whether or not you call printer ink an office supply or a supply, which are two different categories on the tax form, they don't care. Or you could call it advertising and they probably still wouldn't care, because from tax perspective, those three boxes, they all end up in the same place and they don't make any difference. So it's not something that they're going to be super picky about. So a lot of that comes down to sort of like what makes sense in your head, as far as how you categorize these things. The worksheet that we sent to Ashley, that and then you posted it somewhere or sent it out in an email or something?
We're sending it out with the recording of this to make
Great.
sure that everyone who registers gets a copy of that. So yeah, so if you're in the webinar now, you'll get a copy of that soon. Yeah,
Great.
it's a great resource.
Yeah, so that is basically something that handout is something that we send to clients specifically so that they can think about this better. And it basically translates all those expense categories into plain English, in a very brief way, along with some examples. So yeah.
Yeah, so Jazz said that the question that they had just asked through the Q&A was actually the same one that they had sent through email. So sounds like we addressed that one. So I have a question about quarterly taxes. What's the process of filing your quarterly taxes? How do you calculate that? Where do you go to do that? What's kind of the general spiel on addressing quarterly taxes?
Right. So when you work a W-2 job, your taxes are taken out of every paycheck. When you're self-employed or freelancing, you're paid on a 1099 or you're being paid in cash. That doesn't happen. And for a variety of reasons, tax agencies want you to pay your taxes sort of spread throughout the year. So they have these things called quarterly taxes, where every 3 months or so, they want you to send in. They also sometimes call them estimated taxes. Basically, they want you to send in the taxes that you owe on your activity during that period. And the thing that gets tricky is that you don't necessarily know how much taxes you're going to owe at the end of the year, right? Like it's totally possible that, something that you do in something that you publish in November blows up and sells a bajillion copies and totally throws you into like a different tax bracket and whatever. And so these estimated taxes, there are very easy ways to go about paying them or figuring out how much to pay, and there are more complicated ways. The easiest way is to look at how much you owed last year and divide it into 4 parts, and every 3 months you throw that at the IRS or at a state tax agency. I have, how about this? I have a lot of clients who find that process very stressful, and so they choose not to do it. And there is a penalty for not doing it. The penalty is super small compared to what you owe. And if your income from these activities is small relative to your W-2 income or your regular jobby job, then what you owe is probably going to be so tiny that there's not going to be any penalty associated with this at all. You know, a lot of times it comes out to like, oh, it's an extra $17 of taxes or something. Now, if you are going to pay estimate, so if you're not making, you know, if you're not having a bunch of profit from this game design work, then don't worry about it. If you are, and one way you find out you are is you do your taxes 1 year and you're like, oh, I made a couple $1,000. Wow, awesome. And now I owe some taxes. Then essentially kind of the next step with that is that you, you know, in the following year, you look at how much you owed, and you can split that into 4 parts and just pay one part on April 15th, one part on June 15th, one part on September 15th, and then another part on January 15th of the next year. You can also find online, there are estimated tax calculators that basically do income minus expenses equals profit, and then use your profit from that 3-month period to figure out your estimated tax payment. And there are a variety of free tax calculators online.
Cool. That makes sense. Let's see. Another question that I got through email, it was just more of a general question, but can you explain the different types of 1099 forms and any sort of like key things that freelancers should know about those?
Yeah, sure. So there are a whole bunch of different 1099 forms. The ones that are most relevant to freelancers or specific to freelancers, I would say, is the 1099 miscellaneous, and a relatively new one that's getting more popular is the 1099 NEC. Those are, the NEC is non-employee compensation, and the miscellaneous form is just like somebody paid you money, and the miscellaneous form is sort of like, we paid them money, we're not really required to report like entirely, you know, like this is just kind of a catch-all form, like for this is a catch-all form for different kinds of income that doesn't fall into any of the other categories. And so most of the time when freelancers get paid over $600 from somebody over the course of the year, most of the time you're going to receive a 1099 miscellaneous. The NECs are getting more popular because state and federal tax agencies are recognizing that more and more people are earning this kind of income. It's getting much more common than it used to be. So yeah, so that they're sort of coming up with more rules and more ways to kind of track that. The other kinds of 1099s deal with things like bank account interest. That's the 1099 INT, or dividends is the 1099 DIV, or 1099Bs are for stock sales mostly. 1099Gs are for unemployment. You know, but then there's also like 1099Rs if you're like doing stuff with retirement accounts like IRAs or 401ks, like shuffling money between those, you might receive one of those. So there are a bunch of different 1099s. There are other ones also, but they're not they're not especially relevant to freelancers in particular.
Yeah. Okay. That makes sense. So for someone who's, running like a collaborative project or, a small company in the space, and they have to distribute the 1099 forms, is there a penalty if they send the wrong one? Or does it, like, if you send a MISC instead of an NEC, is that okay? Or does it matter that much?
Uh, yeah, no, there is not a penalty if you send one or the other. You do need to file one of them if you pay someone over $600 to do a job for you. If you, it's and filing them is quite easy. There are websites that are pretty good that make the process, they generate the form for you. The process is pretty simple. And it costs like 20 bucks or something. And so yeah, it's there's a lot of different yeah, and as to sort of tie this back to the collaborator on the Kickstarter project, if the money goes into your account and then you share the money with your collaborator, if you're sending the collaborator a whole bunch of money, you should file a 1099 for that, even though you're not technically their employer. On paper, you are, just because the money went into your account.
Got it. So can you, we kind of chatted a little bit about this before we actually started the webinar, but can you talk about the impact of COVID on taxes this year? Any sort of considerations people should have, or I don't know I don't know if that makes a difference for people, especially folks who have maybe applied for, loans or grants or things like that?
Yeah. So a couple of things. Cool. So if you got an EIDL loan or the PPP um, uh, because of COVID, you should know that those are not taxable income, for one thing. Neither the advance nor the loans themselves are taxable income. So that's important to know. Another thing that's worth knowing about the stimulus checks is there's a form on the 2020 tax return that's basically asking you if you received the stimulus checks, and if so, how much did you get? And the reason for that, those are also not taxable income. They want to know that you got the correct amount, because if you didn't, they want to give it to you as a refundable credit. So there are plenty of people who they made too much money in 2019 to get the checks, but in 2020 they didn't, and so now they can get that stimulus as a check, or as a credit rather. Also, this is admittedly somewhat convoluted. There's so I'm going to give, with a lot of things with taxes, the fully correct answer is convoluted enough that it's hard to parse. And so I'm going to give a mostly correct explanation of a federal paid sick leave for self-employed people that has been relevant in 2020. Part of the COVID relief package was this recognition that self-employed people who are being impacted by COVID in particular ways should get paid sick leave, even though they don't normally get paid sick leave because they're self-employed. So the easiest way to think about this is, if you had a profit in 2019 or 2020 from self-employed work, and if there was some kind of self-employed work that you could have done but didn't because of COVID stuff, you might be entitled to paid sick leave on your taxes. The form for this is the 7202. The actual rules are convoluted enough that we spent a couple of days making a flow chart for us to be able to wrap our heads around it, and for me to be able to say the sentences I just did that made it simple. Took us a couple of days of being like, what is this even saying? Because the tax law, like the code itself, is written in a way that humans are not meant to understand. It's like written by eldritch beings. Oh wait, hold on, that's actually eldritch tax laws. That's an adventure right there. Sorry.
I love that idea.
That's a patron if I've
Yep.
ever heard of one.
Yep.
Warlocks for life. Anyway, so yeah, so the 7202 is that's enough to go on that you can know, should I even look at those? Another part of the 7202 is if there was self-employment activity that you could have engaged in but didn't because you were caring for someone else because of COVID. So for example, you couldn't go to a thing that you would have gone to and gotten paid for, but you had to stay home because your kid's school was canceled. That kind of thing. Like I said, it's more complicated than that, but that's a good place to start.
Sure. Interesting. Okay. So if people want to learn more about those specific tax laws, like what's the best place to learn? Is it going through you rather than trying to decipher the law as written?
Yeah, I mean, part of what we do, right, is you know, a big part of my job is listening to people tell me stories about their year and translating what they're telling me about their life and into tax relevant information, and then asking them questions in plain English to clarify whether or not they apply for certain things. That process, I mean, I think that game designers are particularly well suited to parsing tax code because I feel like it's kind of game mechanic-y. So, you know, take a look at the 7202 instructions. And, you know, if as a math teacher of mine used to say, it's not hard, but it might take a while.
That's an amazing saying. We're going to start using that in the Storytelling Collective now, because that is indicative of all creative work as well. So I love that. Well, if anyone has any more questions, feel free to ask. But that is all the questions that I had that people had sent in. Are there any other topics that we didn't touch on, Ben, that you think we should address?
I guess the only other thing that I would say, oh, this is, I could have added this to my 2020 weirdness list. A lot of folks, because of COVID, like left, you know, we work with a lot of folks in New York, and who basically left New York because of COVID, you know, went and lived with their parents or something for, you know, for a time, or just like move somewhere else, but they're like intending to go back and they've been telecommuting all year, that kind of thing. Again, this is shorthand, but if your intention is that you're going back to where you were living before when COVID is all resolved, if that's your intent, and if that's the expectation of your work, that you're going to go back there and resume working in person, then your income is still being earned in that place rather than the place you happen to be telecommuting from. Right? Like I've got clients who live in New York, work in New York, but they went and lived or have been living with their parents in Vermont and telecommuting. But since the expectation is that they're returning to work in New York, that income isn't being earned in Vermont, it's being earned in New York.
Interesting. One of the many things that have been complicated through the pandemic. It's kind of amazing how much it has been stress testing all of the systems in the US.
Yes, it's been it'll be interesting when it's been over for a while. It's like
Mhm.
right now I've been finding it's normal for me to ask people at the beginning of appointments, so like, so how was the last year? All of a sudden that question is way more fraught than it used to be. Uh like
Yeah.
I having to tell people it's okay if the answer is not so good. Like it, you don't have to say fine.
Yeah, I think most folks are probably in that
Yep.
boat.
One
Uh,
client coined the phrase, "I'm doing pandemic okay."
oh, wow, that's a mood.
Yeah,
Yeah, I
yeah.
think everyone can definitely relate to that. Well, awesome. This was wonderful. Thank you so much. It looks like Adam had posted in our Q&A that this was awesome. Thank you so much. If folks who are watching, if you like these kinds of resources, let us know and we'll make sure to plan more in the future. I think we'll definitely have to have Ben back to share more of your wisdom. I'm now hoping that you'll make a Warlock patron, uh, the I don't know, something tax
I
related.
I am 100% making I've got so many ideas already for a tax themed warlock patron. That I'm super excited.
Yeah.
Uh, I mean, anyway,
I
um,
think that's a
my
wonderful
imag
idea. I think a lot of folks will relate to that and will yeah, I think that's kind of I think a lot of people creatives have complicated relationships with money, with taxes, and so anything that we can do to kind of make that more approachable is something that we want to do to help everyone out. So yeah, I think we'll definitely do something like this again in the future. But Ben, where can people find you and connect with you?
I you can find me at brasstaxes.com. And you can also tweet at me at actually I don't even know what is my Twitter
I know there's the Brass
handle.
Taxes Twitter, which is just
Yeah,
at
and
Brass
there's the
Taxes, right?
at Brass Taxes has a Twitter handle.
Okay.
And then you can also tweet at me at Ben Makes Games One.
Okay.
And I think that's it.
Was there an original Ben Makes Games that you need to like now duel for the handle on the
I,
Twitter?
I assume so. Uh, you know, I I had yeah, I don't even know. I don't even know. I think I'm guessing it was taken, but I have never actually seen any tweets by someone with that name. So maybe it was made and then deleted or something. I don't know.
That
Anyway,
sounds about right. Yeah. Well, awesome. And you can find Storytelling Collective on Twitter at Storytelling Cole, COL. That's another Twitter handle that was taken. We'll have to fight some folks for Storytelling Co. or some other variants of that. We're also at storytellingcollective.com. And yeah, we have some more fun talks and lectures planned for this year. So be sure to check our website for information on that. And we're going to post this video to YouTube. And we'll be sharing and sending it out through our email list, along with the resource that Ben mentioned. It's a great handout that has some valuable information about just thinking and planning your taxes for this year or next year in the future. So I think that's all
thank
we
you
have
so
for
much.
today. Yes,
Thank you
thank
so much.
you.
This was a lot of fun, and I really appreciate uh, getting to talk to you about this.
Yes, I know our community is very grateful. So thank you for your time, Ben, and thanks for everyone who spent their morning with us, or I guess afternoon. I'm just assuming that the time zone is the same everywhere, which I should not do. Yeah, and we'll talk to you all soon. So have a wonderful day, everyone.
Bye.
Bye.